Minimum payments explained for beginners. Is it okay to make the minimum payment on your credit cards? What happens if you don't make your minimum payments monthly? What happens if you make more than the minimum? The benefits, as well as some tips if you are struggling to make your minimum payments. Welcome back, everyone. So happy to have you back for another update. This report is being shared from U.S. News. The minimum payment is the smallest amount your credit card issuer will allow you to pay towards your balance each month and keep your credit card in good standing. However, simply paying the minimum is not the ideal. You do not want to do that, and we are going to go into more details as to why. It is especially true if you make only the minimum payment for a very long time frame. Making more than the minimum payment, on the other hand, is ideal. It allows you to enjoy the benefits of your credit cards without the negative effects. On the other hand, making the minimum payment continuously and carrying a balance is not beneficial, because in essence you end up paying 15 to 30% markup on everything you purchase. Now, how are credit card minimum payments calculated? Generally, a minimum payment is based on your monthly balance. Some card issuers set the minimum payment as a percentage of your balance and then add interest, charges, and fees. Others charge a flat percentage of your credit card balance. Your card issuer may also set a floor amount, all right, for the lowest minimum payment you will be charged. If your balance is less than that floor amount, you will owe the entire balance. For example, if your credit card has a balance of $15 and the floor amount is $25, you will pay the $15. You will find more information about minimum payments on your credit card statements that you receive monthly under the credit card terms. So that is where you can search for specific information related to your credit card. Now, what happens if you don't make your minimum payment? You will risk hurting your credit score as well as your wallets, because if you fail to make the minimum payments, here is what happens. First, your credit card company will notify you by phone, mail, or email when you miss your payment, and messages may include a phone number or instructions on how you can get your account back current. Make sure to respond. You also might be charged a late fee if you don't make your minimum payment, even if you miss your payment by 1 day. This fee will continue to be charged each month. The minimum payment amount is not paid, or if the payment continues to be late. Once your payment is 60 days late, your lender might increase your interest rate, and that interest rate can go as high as 29.99%, and it will be applied to your balance and your future purchases. So you want to avoid that at all costs. So it also can extend the amount of time needed to pay off your balance. If you do not make your minimum payment monthly, it will take you longer to pay off that balance. Your credit score could also decrease if you do not pay your minimum payment monthly. Once the late payment is reported, it can show up on your credit report for up to 7 years. If you don't pay on time, you could even lose your ability to use your credit card until your account becomes current. An account that goes 180 days or 6 months without making a payment will be closed and charged off by the card issuer. Now, how does missing a minimum payment affect your credit score? Even a single missed payment can cause your credit score to decrease. Your payment history is the most significant factor in your FICO score, making up 35% of that calculation. So missing a payment can have a huge impact on your FICO score. It also depends on your credit history. The information reported to the credit bureaus about your missed payment will also play a role in how much your credit score decreases. The first missed payment for some with no history of missed payments could likely have a larger effect on your credit score than those who continuously miss payments. Factors that determine how damaging a missed payment will be to your credit score include how recent is the missed payment, how late did you pay, and how frequently you miss your payments. The latter is the one that is the more damaging. Generally, consumers will see a more substantial loss of points when they fall behind on payments. The good news is that you can always improve your credit score by improving your financial behaviors when you begin to increase that minimum payment. Try to make the payment as continuously as possible on time, and within time you can increase your credit score and increase your FICO score overall. And remember that any changes in your score is reported to the credit bureau. Now, making more than the minimum payment on your credit card can help you save money as well. It can also help you pay off your credit card faster and improve your credit overall. Now, how it helps you save money: your credit card issuer will charge you interest on any balance you carry to the next billing period, and this can become quite expensive for you. So that is how you can save, by paying more than the minimum payment, because if you do not pay that minimum payment, the credit card will charge you more and more interest, and that will take money out of your pockets and put it to the credit card companies. Now, also, when you pay more, you improve your credit. Paying more than the minimum helps with credit utilization ratio, or the percentage of your total available credit you have available. As a rule of thumb, many credit card experts recommend keeping your credit card utilization to less than 30% for a good credit score. So you want to keep your credit card balance as low as possible in ratio to your overall credit that you have available. So for instance, if your credit limit is $3,000, you want to keep that balance low as possible. You don't want it to go to more than 30%, because once it becomes more than 30%, your credit score will start to drop. All right. Also, paying more will allow you to pay off your balance faster. Even if you have a balance on your card, you can pay it off faster if you make more than the minimum payment. You also can save on interest when you pay off your credit card faster, paying more. You get the purchase protections as well when you pay more, like travel points, cash back, as well as when you pay more, you have a increased chance of the credit card company automatically increasing your credit limit as well. Now, tips for making your minimum payment. If you cannot make your minimum payment, you do not want to simply ignore that situation and don't pay the payment. Instead, you want to reach out to your credit card company. The Consumer Financial Protection Bureau notes that many credit card issuers will work with you, especially if you are facing a financial emergency. You want to explain to your credit card company why you cannot make your minimum payment and be ready to state how much you think you can afford to pay and how long you estimate you will be able to make that minimum payment, or when you can return to making the payments ongoing. You can also look at your budget and identify cuts that could help you make your minimum payment, things that you can cut out. If your budget is very tight and you don't have any wiggle room, you can also consider a side hustle. Maybe you want to get a side job or do something on the side temporarily just to pay down or pay off your credit card. Another alternative is to explore a debt management plan from a nonprofit credit counseling organization if you are struggling to meet your credit card obligations. All right. Don't forget to share with us in the comments your experience with paying the minimum payment. Make sure to share with others. And don't forget to like, comment, share, subscribe, and hit that notification bell for more updates.